Hey guys, what is up and welcome to a new Tesla update video. As per usual today, let's go over Tesla stock. Let's go over what is happening in this kangaroo market as we're going up and down. It feels like 5% almost every single day. Well, okay, maybe overall more down than up, obviously, because we are trending down. But nonetheless, yeah, let's go over the market. I'll give you my thoughts moving forward. It is a difficult market, absolutely. There's no question about it. But obviously, we're doing our best to navigate through it. So if you enjoyed, don't forget to hit that like button. This is not financial advice. Again, I'm not a financial advisor. Of course, if you do enjoy my technical analysis, thoughts, etc. on the charts, well, I do share my thoughts with my members every single day. The market is open. Check it out. That link is down below in the description if you're interested. Definitely check it out. I actually do want to go over some... Today, we're going to go a little bit over some macro stuff just to kind of give you, again, more zoomed out approach. Just to, when things are this crazy, it's always nice to kind of zoom out a little bit. Just kind of get a picture, an idea of the picture that we're sitting in. Oh, I didn't... Okay, you know what? We'll just do it like this then. I'll just look at it through here. Hopefully this is good enough. It's not ideal, but hopefully it's fine. We'll go over this slightly as well. And I'll give you some overall points that I've noticed. Anyways, let's jump into it. Tesla closing the day, unfortunately down another 5.6%. Just when you thought the pain couldn't get any worse, it always finds a way. But there are some promising signs still that are developing. Now, again, I don't want to sound like... Here's something I'll give you. Here's the tip that I've learned myself. Whenever I start calling the bottom, or at least I'm saying we're close to the bottom, I'm usually right. But I'm also usually about a week early. I've noticed that pretty often. I'm always about a week early, whether it's for tops or bottoms. So I don't know when I was calling the bottom. Have I ever even called the bottom yet? I'm not really sure, I'll be honest. But nonetheless, I still think we're closer than not, because there's a few reasons. Now, obviously, things are spooky. A lot of people are freaking out. Everyone thinks that we're entering a bear market, and we could be. Again, there's no guarantee that we're not. But I'm still, it's hard for me to be down here and be bearish or like overwhelmingly bearish. Like, yeah, there's still concerns. I'm not like all in buying the dip, nothing like that, of course. But, I am slowly nibbling, or at the very least selling sometimes, some cash secured puts, until we at least get some better confirmations, of course. And I'll go over that very soon. But again, it's kind of like being down here reminds me kind of like when we were up here for Tesla stock. Like, this is when like everyone and their mother was bullish, and I was one of the few people that was saying like, guys, it's pretty parabolic. Like, we're really far away from the mean, blah, 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 blah. If I bring out, remember that we're using like this right here. Remember, and I was saying how we're really far away on the weekly chart, guys. We're all the way up here. The mean reversion is here. Like, we usually revert to the mean. Sometimes it takes longer than usual, but the point is that, again, when you zoom out, you almost always, eventually, again, sometimes it's quick, sometimes it takes longer. Every single situation is different, but what is consistent? The consistent thing is the fact that you always revert back to the mean. Even here when Elon was selling, we reverted back to the mean. Even up here, back to the mean. All the way down here, back to the mean, right? So technically speaking, even if you bought all the way here, you were, technically break even. But the point is even after this pretty substantial drawdown still, it's still reverted back to the mean. And then even so, you went up, right? Again, the point is the fact that we're always going to zigzag in a direction. But the point is we're going to zigzag around the mean. That's just how these things work, right? And again, down here feels, the vibes are just very similar to me personally as they were up here, just obviously flipped. Right here, I was, very cautious. And here, I know I'm still cautious. Again, I'm not trying to say that we're guaranteed to bottom around here or anything like that. But again, we're very far away from the mean. So just like when everyone thought I was crazy up here and all the bulls were yapping about 600, this kind of feels the same, where now it feels like everyone's yapping about, 200, 180, and yeah, maybe we could go there, but there's no way, at least I don't think we'll go there in an instant, like not from this move here. Like, there's no way in my mind we'll just go like this. Like, that'll be that's pretty much a bear market. At that point, we'll be entering a bear market and everything will be tanking at that point, right? So, and that's one of those things you just can't predict, right? No one will predict the bear market. You guys know the story of like, what's his face? Man, the Big Short guy. Oh my God, I'm like blanking out his name. I'm talking the Big Short. How he predicted, like, the people always meme about it. They're like, he predicted 3 of the last 17 bear markets or something like that. The point is that you'll never know. You just simply do not know. But what we do know is the fact that stocks revert to the mean. So what does this actually mean moving forward? Let's talk about it. Right. And again, I want to make it clear. It doesn't mean that we'll just snap back up right up to, the mean up here, which is like 350. I'm not necessarily saying that we're just going to do straight up that. And again, this might take some time. This could happen next week, could happen in 2 weeks, could take another month, maybe even 2 months as it slowly comes back down to us and we sort of meet in the middle. Like, you don't know for sure. But the point is the fact that the farther away you are from the mean on a good stock, not like some, horrible company. Like, I know a lot of people are buying like Elf, for instance, but it's a small cap. You have to remember, small caps are, even this reverted back to the mean, right? And there's a good chance it's going to bottom out around these general levels and revert back to the mean closer to 100. Even a 3 billion market cap stock did this, right? And these are obviously substantially more volatile. But the point is the fact that it even happens on those small caps, which are very, very volatile. That's just kind of the more zoomed out picture. I'm going to go over the macro a little bit more on SPY and QQQ soon as well. But what do I like right now that's happening in the markets? That, again, takes time. It's not going to happen overnight. These things take time. The market will bleed you out. It'll make you fold. It'll make you wonder. It'll make you second guess. It'll make you do a lot of things. It's quite literally designed to do that. That's just, it's how it exists. And if you treat it like a casino, you'll most likely get treated like, a player at a casino back, if that makes sense, right? Casinos exist because they're damn good at taking people's money, because people are going in with the gambling mentality. So if you're treating especially a market situation like this with a gambler's mentality, in other words, going for very short-term, high risk, YOLO calls, YOLO puts, whatever. YOLO puts you've been doing pretty well, clearly. But you get what I'm trying to say, right? The market will constantly be trying to, at these kind of situations, it'll always make you want to fold. It'll make you want to panic. It'll make you want to do all these things, right? That's kind of the more psychological aspect. Now, in the actual chart, what am I seeing that I actually do like to see? Well, so first of all, we're obviously near the Bollinger Bands. We're still pretty much hugging the bottom end of this trend line. If I bring out this here, right, we're still, very oversold on this band over here, which I like as well. But what I really like is two things on the chart. The first thing I like is the fact that we're making nice looking bullish divergences, whereas we're consistently bleeding lower, and essentially making lower lows and even closing lower than before. Like today's close, for instance, was the lowest close we've had pretty much ever in this drawdown that we've been experiencing. Very aggressive drawdown, I might add. We're making a nice bullish divergence on the RSI. You can see very nice looking higher lows, right? Constant higher lows, despite the stock doing what? The literal opposite. This low was here, this RSI low was here, and now we're down here and we're still making higher lows. Now, this can falter. This, nothing is foolproof, nothing is guaranteed. But again, it's all about looking at what is presented to you and, making the best of it. And this is what I see with this, right? It's a good sign. Like, these are good signs. And it's not just Tesla. AMD is doing it. And even NVIDIA is not really doing it yet. That's why I'm still not... NVIDIA is just not, I don't know. It's up on Broadcom earnings, which is good. That actually might save it, honestly. It might even save the market because, which I'll go over more in the NVIDIA video. If you check it out, if you haven't yet. But Google, nice. It also was setting up a bit of bullish divergence, right? Amazon is doing it. Like a lot of stocks, not all of them, but most of them, a good portion of them. Meta is doing it as well. Same idea, right? SPY, which we'll go over very soon in QQQ, like they're all doing this bullish divergence, which is good. But as if that's not enough, there's something else I like about Tesla. Now, this one is a minor point, but at this point, honestly, I think the bulls will take anything they can get. And what is that? Well, we close higher than Wednesday's low. So this morning I was telling my members that if we drop below Wednesday's low, that is a bit of a concern. However, and this is where the weekly comes in. You can see we're still very close to this trend line and we're still technically in this massive demand zone. But what we didn't do, which I like, is we didn't close below Wednesday's low. And this is the first time, I believe, in a while where we did make a lower low, but we didn't actually close. Like from a previous low, maybe this candle as well, which we did get a small relief rally. But the point is the fact that we closed, we went below this Wednesday low here, which is about 262 roughly, something like that, right? We went below it and we closed above it. So that makes me almost think that the market is just trying to just trigger stop losses, because take a look at this. Like, look at this, right? This low right here, you can see kind of like this, something like that. Or you can even put it like this even. Why is it not doing it? What the fuck is going on? There we go. Something like this, right? So the market likes to undercut these lows. Like I mentioned many times, markets love undercutting lows nowadays that, people probably have stop losses, because again, if you were to just logically think about it, if you look at the daily chart, everyone's looking at this bounce right here and everyone's probably entering. They're like, okay, it's going to break out. Great. And, there was potential, but most people most likely had stop losses below the undercut of Wednesday's low, right? That's a pretty common place to put stop losses in these kind of cases. So not only did we undercut that, probably got a bunch of those stop losses out, but we ended up going back above it. Again, an example I used that, was pretty powerful with this was Nike. Nike was a bit more extreme, but nonetheless, same idea, right? Remember I used this example on Nike where we undercut these lows here, right? Remember, look at this support. Look at the support that it had here. And then look what happened on these two candles here. Undercut it substantially, very bearish looking candle, just for it to reverse. Classic bear trap, classic stop loss hunt. And that gives me those vibes. Now, I'm not saying that's 100% what's going to happen, but the vibes like that are definitely there. So let's see how that actually plays out moving into tomorrow. We have more job data tomorrow and whatnot. So, we'll see how that goes out. We have JPAL speaking tomorrow as well. So let's see how that actually plays out tomorrow. But that's kind of something I'm watching, right? Moving forward on Tesla stocks. We have the undercut, which we close back above, which I like. And we have these just bullish divergences. Now, what else do I like? I like the fact that VIX obviously is still rocketing. Like this thing obviously needs to start falling back down. But what is the VIX doing? That is the exact opposite of what I just showed you that the market is doing across the board for most stocks and the mega caps and SPY and QQQ are doing. They're doing the bullish divergences where you're making lower low and you're bleeding down and to the right. But the RSI is going up and to the right, higher lows. VIX is doing the opposite, exact opposite, where the VIX, as you can see, as it's constantly going up and up and up and up, hugging the top end of the Bollinger Band, where if I also bring out the ribbons, you can see it's just the 8 EMA is just consistently supporting it. But what is it actually doing on the RSI? It's making a bearish divergence, where as the VIX is constantly going higher and higher and higher, it's going lower and lower and lower. Now, again, you have to understand, divergences take time. Divergences don't happen overnight. They're not going to happen sometimes in 2 days, 3 days. Like they take time, right? Divergences do take time. It's slow. It is slow. Sometimes it takes easily a week. But the point is that they're pretty powerful and they show exhaustion. So this is kind of almost like showing an exhaustion of fear, if you will, in the markets, at least the VIX is, while the markets themselves, like SPY, etc., are showing essentially seller exhaustion, right? At least as of right now. Obviously this can falter, but as of right now is what it's showing, which is a good sign that there is potential of that. So that's something else I'm watching very closely. Another thing I'm watching on the broader market here is for SPY and QQQ is a megaphone pattern, right? So of course we have the megaphone pattern, which looks something like this, where it's a bullish megaphone. You have a move to the upside, then you start consolidating in an expanding range, 1, 2, 3, 4, 5. And that's kind of what we're doing here, right? I mean, tell me it doesn't look almost identical, where we have a massive move up and now we're essentially doing a massive, and this is the correction, but we're doing a 1, 2, 3, 4, right? Similar to what this looks like, 1, 2, 3, 4. And then obviously we have potentially a move from the lows around here to 5. And then we actually supposed to break out of this, right? That's technically what is supposed to happen. Now, I know everyone might look at this and kind of roll their eyes and say, man, these bulls, man, they just don't know any better, right? But, that's exactly how the market wants you to think, right? I got the exact same eye rolls when I was, very cautious and even arguably bearish up here. Now, granted, I was early. I didn't call the top perfectly or anything like that. But I was mentioning many times how when we were up at these levels, like in general, it's not an area to buy. Like this is just not where you buy. This is very risky, very, very risky, because it's too extended, right? And it feels like this is the exact opposite as it was there. Now, let's talk about a little bit more of a zoomed out approach, right? This is where we start talking about, a bit more of correction, if you will. Like the market's experiencing a correction, right? This is a correction, pretty much a correction territory that we're experiencing, especially on QQQ. But let's take a look at history just for the, just to see how the market has in the past behaved similarly. So we have the seasonality here, right? Now, what the seasonality shows is that more often than not, usually it's March. It's not always March. It's not, so it's not always that easy, but March is the more common one where you can see the VIX spikes in March and the markets fall in March, right? Or at the very least, like the first half of March, roughly the first week, maybe we're front running it a little bit. Maybe it'll happen. It's all happening right now and starting next week, it's better. But the point is like the first, we'll say half of March-ish, the market tumbles and the VIX spikes aggressively. And that's exactly what's been happening, right? Again, sometimes it could happen in February, sometimes it'll happen in April. So let's take a look at when this, I was curious, like what happened last time, right? Like, okay, let's take a look back at March of 24, right? March of 24 was here, right? This was March of 24. Let's take a look. This one here, right? This was March of 24. And this is where we also corrected. Now, again, this was from up here all the way down here, QQQ corrected just over 8%. Right now, what are we sitting at? We're sitting at almost 10%, pretty much correction territory, right? But here it obviously bounced off of the 21. But the other times where it had a more severe correction, because again, these things vary, right? You're not always gonna get a smaller correction. Sometimes you'll get a bigger correction, like these ones, for instance, were closer to 12%. This one up here was more substantial, almost 16%. But what do the more severe ones do, right? Obviously, sometimes you get these smaller corrections like we had over here, for instance, right to the 21 EMA on the weekly. Sometimes you get these larger ones right here. And what do you think the sentiment was back then, especially on this one right here, right? Probably pretty bearish. Probably people calling for the end of the world, as they always are. But what do they both do each time they went to the 50 EMA? 50 EMA, 50 EMA, where are we right now? Right back at the 50 EMA. If you told everyone that same thing here that happened here, everyone would have called you a clown. But the market ended up bouncing. Now, again, I just want to make it clear. This could be different. This time, yeah, this time could be different. Again, I'm not trying to, act like I know the bottom. Nobody knows. Nobody knows. Literally nobody knows. But it's important to look at just market behavior. And again, each time it's corrected down to the 50 EMA, even this aggressive one, very aggressive, we snapped back. So let's see, we're pretty much there. Now, obviously, if we start closing below the 50 EMA on the week, on QQQ, for instance, or SPY, which is a little bit farther away, but nonetheless pretty close, it could be a little bit more concerning. But even then, for instance, back here, look at this. Like if I saw this back here, this would have been very concerning, right? Look at what SPY did. It's closed below the 50 EMA, the 21 and the 9, and the 8 crossed bearish, and then it did dip further, but not that much, right? Not that much more. It dipped about another 2-3% before it completely and utterly rocketed, which is why, again, a lot of people say, naturally, the classic saying is timing the market less than, or I guess time in the market greater than timing the market. And yeah, that's usually the case. That is usually the case because you'll get these false moves, you'll get these things. But the point I'm just trying to make is the fact that, again, we're pretty much at the same levels where QQQ at least found major bottoms. So let's see if this time is any difference. Let's see. It'll take some time. I think probably less time than before, because we've already been in this process for like 2 weeks. Could take another few days maybe, who knows. But yeah, that's kind of my overall, I want to really take a zoom out approach a bit, right? And just kind of give you an idea of that and what I see there. But again, let's see what happens moving into tomorrow. Let's see how the market reacts, and especially next week. I'm very curious about next week. And don't forget, we're also potentially setting history. Unless Tesla somehow rockets above 293 tomorrow, I mean, it's technically not impossible in this kind of market, but it would be, right now it seems impossible. We are potentially printing history. This will be the first time in history the stock has ever had 7 consecutive lower weekly closes in a row. So let's see if we print history tomorrow. Hey, at least we can say we've lived through literal history. That'll be fun. But yeah, anyways, that's all I got for you. Let me know what you think down below. Options flow, let's take a quick look. Pretty mixed throughout the day. This shows a lot more bearish flow than bullish flow. That's because, in the morning-ish, around closer to noon, a lot of bearish flow came in on Tesla stock. I assume a lot of them closed out because especially these ones here were they were literally this week or next week. I assume a lot of them are closed because if I go over here, you can see Tesla is actually 72 confirmed bullish flow. So I assume a lot of the bearish flow did close out. But yeah, that's all I got. Thanks for watching. See you tomorrow. Peace.